So this video is going to go into how to get the 0% credit cards, the actual funding sequence. And really, the main things are having the 680 score, a seasoned profile, targeting community banks and lenders, and asking the right questions, right? And if you're wondering, well, like, how can I get the cards, right? This is the main thing that you kind of need to look at. Basically, anything, if you're a startup, right, under 2 years old, you have to get the cards, right? That's really your only option. And what you're gonna notice though is that eventually, after this, once your business has aged, the thing that determines what else you can get is the financials, right? And you'll see as I go along. But right now, we're just gonna focus on the cards. This is for startups and existing business owners, okay? So the minimum funding requirements, the minimum 680, at least 2 years of total credit history, less than 10% utilization, max 20%, no negatives, lates, at least three revolving credit cards with $5,000 to $10,000 limits, one installment loan, auto, personal, or similar with perfect history, right? All primary accounts, no authorized users. Authorized users get removed during underwriting. A lot of underwriters just know that authorized users are used in that sense, right? So they have to be primaries. No more than two inquiries per bureau. And then these are auto declines, high utilization, negative items, no credit history. And then the borderline, if you have recent negatives, like a late payment, but your score is like a 700 plus, you may get approved. Old negative accounts or small balances that look like high utilization. So like 2K on 5K being used, right? Pay it down if possible. And yeah, basically that's what I'm saying here is you have a really strong payment history, but you may have like some negatives. Negatives don't always mean automatic denials. It could cause your file to get flagged. And then here's me explaining the authorized users. And this applies also just in general for these sequences here, okay? I'll still have them in the guide, but I'm not going to go into it on every single video. But anyways, so basically the core strategy is this: which bureau they pull from, shared underwriters, and lending thresholds, okay? And it's still as if we're doing this stack here, but it changes a bit. So we still want to do the regional banks, credit unions. These are the databases. US bank locations is what I like to use. And you gather the verified data points. And this is for the business cards, right? This is what you're going to be asking: which bureau they pull from, Experian, Equifax, or TransUnion, who their card issuer is, or the underwriter, right? You can just ask them who the card issuer is, right? But card issuer is basically underwriter. These are the most common third parties: Elan Financial, TCM, and FNBO. There's a couple other more than just these ones. There's just so many out there, right, that I can't list them all. But these are the most common ones you're going to see. And it's not a bad thing that if you get a card from them, it's just you don't want too many applications with the same underwriter. And you'll see as I continue, right? Their approval limits, right? Sometimes like you can go some places say you can get like 20 to 50,000 on a card without financials, but you can get more on a card if you provide the tax returns. So keep that in mind, right? And these are the main key questions. Again, I have the call script for the business cards, a more in-depth one that you can ask and to build out an actual sequence, right? But generally, this is all you need to ask: what bureau they pull from, who, who is their. You don't want to ask the third party underwriter like this. You want to say who issues the card. So, do you issue your own cards, or is it a third party? So let me fix this real quick. Oh, hold on. Do you issue your own cards or use a third party? And then they will tell you, right? Maximum stated income approval limit before they require tax returns, right? And then do you lend to businesses under 2 years old? Usually they say yes, but you always want to double check. That, but again, a lot of times they're gonna say, yeah, we do work with startups. Okay. Now, to build the sequence, your goal is to track or basically use different banks that use banks that use different credit bureaus and also different underwriters. Okay. So if you apply at three banks that all use, oh, this is what I was saying, right? Like they all use Elan Financial, they'll see your prior applications and they may likely deny you, right? Even and that's true. Like even if they pull from different bureaus, you see what I'm saying? Like let's say bank one, two, and three are all you like one uses Experian, one uses TransUnion, one Equifax, but because it's all the same underwriter, they all see it, right? The underwriter sees it, and so you get denied. So you got to keep that in mind as well as you're building it. So you apply in a sequence. Start with Experian, you move on to TransUnion, then Equifax. And again, remember, make sure that they are all different underwriters. And this is a real life example, right? You see, Valley Bank, TransUnion, with they underwrite within the bank. Synovus, Equifax within the bank. This is an example of was this is People South Bank, right? They use card assets to underwrite. You see, this is one of the underwriters that card assets. Meridian Link is another one. These are the other ones. Again, there's a lot. That's why I didn't list them all. But my point, you do like First Citizens, for example. That'd be one. Experian Bank, then Fifth Third, and then Citizens Bank, right? That's three different ones, all different underwriters, right? And then I may say, okay, now let me just do Bank of America because they do TransUnion and sometimes Equifax. And again, they underwrite within the bank, right? And then I may say Equifax, right? Or not, sorry, yeah, Equifax. You see what I'm saying? I hope this makes sense. I'm trying, like, I'm trying to make it so that you guys can visualize it, right? And that is the sequence. And again, the reason I started off with this is because you're going to notice that it is all the same thing. The pattern is the same, except things kind of change depending on your intent, how you're moving, right? Now, this soft pull requalification strategy is best for thin profiles. Not everyone needs to do this, or if you're just curious on if you can get funding or not. This is just to test your fundability without risk. By the way, this whole business card strategy also works for personal credit cards, by the way. It's the same thing. So test your fundability. It's best for thin profiles or borderline profiles. It's a coin toss. Again, it's just to see if you're fundable. Typically, I tell people if you cannot get a one that just soft pulls you, right, then you might want to build up your credit history first. And the good thing about this is that with the soft, when they check to see if you're approved, like if they can get you funding, with the soft pull, if you get denied, there is no hard pull, right? So it's a freebie. But if they do approve you, it's just an automatic approval, right? And then they switch the soft pull into a hard pull. It finalizes it, and then generally that'll tell you if you can go and get more funding, right? And again, I usually recommend this soft pull strategy for people that may not know if they're fundable. So here, let me show you something. So I'll show you a real example. I won't apply, but Amex is known for the pre-approval, right? Like pre-qualifying you. Amex is known for it, and you can just put in your information here, and this will give you an example of like if you qualify. This is getting into my account for some reason, but basically, if you click on it, you can pre-qualify. There's a lot of banks like that. You just have to Google it typically, right? Amex is the most common. Now, funding tips: if you're choosing between high limits versus 0%, um, that's really up to you because a lot of places are going to offer you 6 to 12 months, right, of 0%, but other places they might offer you higher limit funding, right? But they're not going to give you a 0% rate. Okay. So I mean, just choose what best works with you, right? You can get a mix of high limit funding and 0% or just only 0%, right? And also keep track of like your banks, kind of like this. You want to have a funding log. I have in the call scripts, you can build your own funding log, right? Using these questions. This is like all you really need, right, to build it. Here's your list. And again, this is the bare minimum questions, right? But these questions give you more in-depth answers, and it can allow you to build more as you start building like your stacks, get a little bit more dialed in, right? Now, also warm up your relationships. This isn't necessary, but I always recommend that opening a business checking account and simply just making large deposits makes a difference. They do take into account how you're making deposits into your account, right? So you can warm up the relationships if you want. It's not necessary, but this is something you can do a step further. So you not only are you contacting the regional banks and letting them know like, hey, I want to open the checking account, get the relationship started, but I also want to do a $10,000 deposit as well. And And just to show you guys, I don't know, just make something up, right? Like just show you guys that I'm, want to get this going or something, right? And they actually like that. Like you think it doesn't work, but it does. A lot of banks, they still go off that on the business side. And you wait about 30, 60 days before applying, right? You don't have to do this, but it does help. Okay. And that's really the sequencing for the business cards. This works for startups and existing businesses. And here's the actual the flow chart, right? The main thing on whether or not you can get business funding, I guess I should preface, is the score. The 680 is the main thing. After that comes down, well, really it comes down to the age as well, right? So really the 680 should be up here, but it's okay. We'll break it down later because once you start hitting the 1 and 2 year mark, you start unlocking the bigger products. And so yeah, and whether or not you have financials, it's okay because I have this strategy here, the line of credit stacking, that shows you how to build a sequence. Okay, and then this one combines it. So let's go ahead and actually work on this now. And again, you're gonna notice it's the exact same structure and pattern.